are live here today for, what is it, the Thursday, January 18th for our YouTube live. If you guys are new to this, we started this just actually early this week. So hopefully we're going to be doing this a few times a week at least, maybe 5 times a week to give you guys some tips and tricks for educational purposes for you trading and investing. I just got back from the gym. Has anyone ever had one of these Cliff Bars? I've been walking past the counters at Walgreens, whatever, for it seems like an eternity now. Never actually had one, just had one. They're amazing. Anyway, what we're going to talk about today is a simple stop loss strategy. One of the main reasons why people lose money in the markets is because they don't they let their losers run. And so what I'm going to show you guys here in just a second is what I found to be the most effective way to use stop losses in multiple time frames. And before we look at the charts here, the most important thing to understand here, and this is also what I found a lot of people do wrong, people are afraid to take a loss, but what they forget is that you can always get back into the market. And I'll tell you, when I first started trading, when I quit working in Wall Street and started on my own, I actually lost a lot of money initially, and it's because I let my losers run. Because I forgot that you can actually get back in. And once I finally sort of relearned that, which I had initially learned in Wall Street, but then I forgot or didn't want to use it, I don't know how you want to put it. The point was, once I understood that you can always get back into the market, once that sort of really started getting ingrained in my head, and I've seen this with a lot of students now over the years, it has literally turned my trading and investing around overnight. So let's have a look at the charts, and I'll show you this very simply how it works and how effective that is. Let me turn around the camera here. Here you go. All right, so what we're looking at here is, it doesn't really matter what the stock is. In this case, it is a stock. It could be something else. And let me just pull this a little over here, and you can see. So actually, no, let's put it back up like that. So to me, a very simple rule on all of this is that we're looking, if you are swing trading, which means you have positions on of a few days to a few weeks, what you want to do, we want to get out of swing trading longs once you have a meaningful bearish reversal. What does that mean? It's usually a meaningful one-day sell-off that's visibly clear on the chart. So for example, in this case, we're looking at shares of Square, which is ticker symbol SQ, in case you want to know, because I'm sure a lot of people are thinking, what is this? So this day right here, this was a couple days ago. So if you would have been long, let's say, a Square on a breakout or whatever this might have been here, and in fact, this is an actual trade that I did, this would have been a day to get out. Not to completely liquidate the position, but it would have been a day to at least take some partial losses or at least make your position smaller. Now, at this point, we're waiting for the next bullish reversal. And this is the swing trading time frames of a few days to a few weeks. The reason we do that is because once you have a day like this, the odds are fairly decent that you tend to see more downside. And by respecting the one-day sell-off like this as a stop loss, at least on a partial position, you could even close it entirely, which is totally fine, you eliminate that pain. Because in essence, after that one day, this chart hasn't broken for the most part, but at least you're risk managing. And at this point, I'll tell you, like, for example, what we're going to be doing here, upon the next bullish reversal, which would in this case right now be if the stock were to get back above those previous highs from the other day, we would look to get back in, because then the stock is presumably resuming its uptrend. Now, if you want to take a step back on all this, and maybe let's say you are a bit of a more medium-term investor, then what you need to do is you need to make this daily chart. You see how it says D up here? You need to make that a weekly chart. And I'll give you an example here. So let's look at the same chart that we just looked at. If you would have been long Square, in this case, it's just an example. It's not a recommendation. If you would have been long the stock, you would have had to get out from a medium-term perspective after this week, right? At least in a partial position. But from this perspective, the other day that I just showed you here, this would have been no reason to get back out. Does that make sense, folks? Give me a like or a yes or something like that. And that's the big important thing, is it's all about understanding what time frame you operate in. So in the case of, to kind of illustrate a little bit more, in this case here, this 1 week sell-off would have been enough to stop you out of the medium-term trade. But this would have been then the time to get back in. And you can see how what that does over time is help you avoid a lot of the downside, and it keeps you not only from having big drawdowns, it also keeps you with the right mindset. So that's pretty much what I wanted to go through. It's a very simple and straight stop loss a strategy that I've found that works very, very well over the years. Again, it's all about keeping it simple. I find that the more complicated to make these things, the more difficult it gets. And we'll see you back here in hopefully tomorrow, YouTube Live. We'll do it around 9 New York time, 9 a.m. New York time, 9:30 New York time going forward. Take care.